Joining me now for a closer look at what's playing itself out in that market scene is Thamsanqa Netha from Shiloh Capital. Thamsanqa, always a pleasure and a good afternoon to you. Thank you so much for being with us today. Maybe we can start off by just reflecting on what we are seeing on the JSE as well as in Europe already. A little bit of a mixed bag here at home, but all around a bit upbeat in Europe.
Yeah, typically when miners perform and other assets don't, you have this up and down. Call it an orange day. It's green and red. But in Europe, I think the move is around, especially the Fed and how the interest rate decisions are going. I think over time, the market's going to accept that these rates must remain at a particular level to manage inflation, especially with economies in Europe. For example, the UK going into recession and America going into elections this year. I think it's going to say a lot about what's going to happen going forward in the continent.
I must ask you, we did see that higher than expected jobs data coming out of the US. We are expecting inflation data to come out. Any numbers there that we can pin to what we can possibly see there, Thamsanqa? It is actually looking like much stickier than inflation than what I had anticipated.
Yeah, exactly right. I think the inflation number is not going to continue to decline at the rate that they need. The downside now is they're going to have to make a decision between increasing interest rates for the sake of inflationary pressures or holding them to ensure that there's not more damage to the economy that could potentially tip it into a recession. That decision, unfortunately, is more political than economic, and it will swing the way those who are leading the economy will be in charge, which is the Democrats. So it will be more political than economic decision, which will be dictated by the numbers.
And I must ask you also, timing cuts. I know we're expecting minutes to come out of the US Fed this week. This issue of timing cuts has actually had markets really rattled and inconsistent over the last few months, especially over the first quarter. We are expecting it to still continue in the second quarter at Thamsanqa. This issue of when 3 cuts, 2 cuts, 1 cut at this point.
Yeah, I think we're now getting into choppy waters where it would be difficult for the Fed to box itself into the number of cuts or to box itself in any decision making in general. I think, again, the issues we have now is that the politics is leading the economics, and we're going to have a lot of unsettlement that's going to happen around. It might be followed by some volatility, but until we sort of get some results in November, I don't think anybody would want to box themselves into who are going to make decisions in this framework.
Got you. Keen to also just touch on the issue of gold, strength to strength for that one. And I'm keen to get your thoughts here. I've also seen actually Bitcoin also getting some strength. What it does tell me, Thamsanqa, is that investors are risk averse at this point.
Well, it looks like Zimbabwe started a trend where everyone's going into gold. I think it's all about risk management. I think a large part of it is looking forward and seeing some choppy waters. Israel and how they're behaving of late, what's happening with Russia, what's happening in Europe, recessionary pressures, elections in America. I think there's a lot that's happening that could potentially be quite volatile, and to hedge against that, the purchase of physical gold. Initially, it was the thought where the prevailing market view was to buy gold miners, but now the view is to actually buy physical gold. BlackRock has been touting Bitcoin for quite a bit now, so I think it's becoming an asset class that will get some allocation across the board.
Very interesting times indeed. A big one coming out of South Africa today, keen to get your thoughts on it, is I guess us knowing that we're definitely moving forward with the MultiChoice and Canal Plus deal here. Quite a bit coming out of there. I guess the 125 Rand price has been accepted. That's okay. But an interesting one, I think, in the Sense announcement, and I'll read it. It says that Canal Plus's parent company, Vivendi, is undertaking a feasibility study for the proposed split of the company into several listed entities. And that's a very interesting one because, of course, that does maybe put into question what a MultiChoice might look like in future.
Yeah, so I think the Competition Commission will have some hard thinking to do. I think as an M&A guy, always happy to see a deal like that happen when international buyers are interested in your domestic assets. It means you're running great businesses. However, as a nationalist, you have to think about seeing Mnet and SuperSport be owned and controlled by a French business. Is that a good idea? Is that worth it? Do we still have some form of operational control? Will we see the likes of the Shaka Ilembes and Chasing the Sun 2 still produced? Or will there be a different version of what's going to happen? Those kind of dynamics is something that the Competition Commission must think through thoroughly and ensure the framework of the transaction is within ensuring that we maintain a lot of our national identity and IP in the sale. I think as a deal, I think it's a great deal. The numbers look good. However, we've got to look at it broader than just the economics.
Very interesting, actually, the role that the likes of Super Sports and Mnet play in South African entertainment. We'll be watching for that one very closely. Also keen to get your thoughts on Serus real estate. They've gone through, I think, what we might call a recycling of assets, disposing of some, acquiring of many, but still really focused in UK and Germany. These are both economies that actually aren't doing very well right now. But of course, the tide will turn.
Yeah, and I also think where they own assets and the quality of assets they own, those two elements are a bigger determinant than necessarily the economies in which they operate. Real estate is a great asset anchor. If you buy the right quality of assets with the right types of earning profiles, I think you can weather most economic storms. However, also foreign ownership is also tricky. It's also some understanding of that needs to happen. I'd prefer to own a domestic denominated asset or counter that invests in assets like that. So I'd be looking like at Sesfigile and their funds that invest in those type of assets. That removes me further from those risks.
I also ask you, just speaking about these commercial property companies, of course, like you said, some of them are rather domestic facing, looking at South Africa. And some of them are really wildly, diversified, looking at the UK, looking at Germany, but also looking at Eastern Europe, Thamsanqa. Out of those that, you look at, the ones that you do like, which ones would you possibly be keen on?
As I'm not renowned, I'm not a great property guy, but I think I would always look at an asset manager that has domestic exposure, and I'd also look at a property manager or a property company that's focused on providing domestic investors with global exposure. That balance provides some risk mitigation and also provides liquidity on exits and the likes. The key issue again is valuation, property quality, rental profiles. Those sort of things are what has tanked a lot of very, very good and reliable property developers as well as REITs. So I think the view will always be towards a company again like Sesfigile who focus on investing in listed REITs rather than direct developers.
Got you. I'm keen to get your stock pick in a bit at some time now, but first, I'd like us to reflect on counters that have found favor with your industry peers.
So I'm thinking, to be honest, I've said it for a while. I think Sanlam is a very good opportunity. I think they've had a healthy pullback, but the results, they've been delivering strong results in a very difficult market. This market has been tough to operate in. We've seen some of the peers really struggling, and it's a tough economy. It's hardly growing. And if you see an uptick, if you see rates tick down, you see the consumer confidence start to return, and you see commodity prices rally, that will benefit some of the rest of their African operations. India is a standalone pillar of strength, as we've talked about. And then you've got some improving prospects in South Africa as business and consumer confidence improves, assuming the election goes our way.
Yeah.
So I think it's a lovely play. I think it's a nice opportunity, and it's one you can sleep at night holding this company.
My stock pick is something different today, and I'm bottom fishing. It's Sokosan, specifically Sokosan Gaming, the casino operator.
Kobus, thanks.
So
yes,
this is a very cheap stock at the moment, and it's one of those lesser loved small caps or small or mid caps in the South African listed on the JSE. We hear the CEOs complaining about these all the time, but they do present investment opportunities if you can get the liquidity in them. It's trading at a PE of 5.5 backwards looking. We haven't had any news or announcements or engagement since the results almost for the period ended 6 months ago now. And ultimately, it's a business that's operating well. It's very specialist and focused, runs South African casinos only, and it's one of those industries that we anticipate to continue see some recovery post COVID, as has already partially occurred. So we think it operates a pretty slick business model, very focused, unlike its peers, which are venturing offshore and still involved in hotel groups, I think it's just one of those things that flies under the radar, and it's incredibly cheap at the moment. So the PE of 5.5 and a dividend yield of around 8%.
All right, Thamsanqa, Sanlam as well as Tsogosan Gaining. Keen to get your thoughts on those.
Sanlam, I think quite indifferent, quite large. They've got a good share of the market, but I'm not sure if they can continue to grow meaningfully, especially for newer growth searching investors. Tsogosan is an example of a business that is an advocate for fund managers that focus on small caps and mid caps. So I think it's a great buying opportunity. I think it's a great business. They still have to work towards their digital side, and I think there's a few things coming on that side. And they're just suffering from liquidity. Enough people in there, can enough people buy? And I think that's where they suffer. But I think as a stock value, I think it's a great buy.
With that said, which counter do you like today?
I stick to Sibanye. I've been shouting for this for 6 months now. I think they're a great stock with great management, and I think they'll find value over time.
Brilliant. Always a pleasure having you with us, Thamsanqa. Have a great week further. That was your midday markets update with Thamsanqa Netha from Shiloh Capital.